Apple continues to innovate and capture market share. Joining us now to discuss that is our finance expert, Scott Rothbort from Seton Hall University. Thanks for joining us today, Scott.
Thanks for having me back.
And of course, Apple taking the stock world by storm.
Well, it is if you look at the price on absolute basis, but I think when you stand back and you look at the stock and what the company's done, it's still cheap if you ask me.
Wow.
Where does it stand, the price right now?
Right now the price is around $615.
A share.
A share.
It sounds for somebody who's not a finance expert, somebody who doesn't play in the stock market, that sounds outrageously high.
Well, because you're looking at the absolute price. But on Wall Street, we look at the relative price, all right? We look at value. And what we ask ourselves is, what is Apple really worth? Well, this year the company is probably going to make $45 a share. And we probably want to multiply that $45, which is what we do in finance. We teach at the university, and I do that when I invest personally and professionally. We're going to multiply it by about 14, which is the market multiple. Although I would admit that I think Apple deserves more than the market multiple because of how fast it's growing, but because it's the largest company in the U.S. marketplace. We're going to use the market multiple. So we take 45 and multiply it by 14. That gets us 630. But hold on there. Apple has $100 per share in cash. So we want to add that $100 per share in cash. That's $630. And on a conservative basis, we're getting a valuation of Apple at $730 per share.
Even though you're buying it at what, at 600, right?
Well, let's say you're buying it at a little over 600, 615 or so. So the stock potentially has another $115, $120 of appreciation, close to 20% appreciation potential.
I've got to,
Go ahead.
I was just saying, I just got to jump in here. To me, it amazes me you've got a company that creates a product the consumer didn't even know that it needed, and then it rushes out and has to have it.
Well,
that astounds me.
Well, a few things. Apple knew that you needed it, apparently.
I didn't know I needed it. Now I can't live without it.
You have one of these?
I got that. My husband's got the iPad.
Okay.
My kids love the iPad.
Well, look, when I was growing up, we had an Etch-a-Sketch. The iPad is almost
Watch out with the Etch-a-Sketch. That's come up on the presidential campaign. But I digress. I digress.
Right.
Go ahead.
And so they've been able to innovate. And while Apple started off as a computer company, they really aren't a computer company anymore when you think about it.
That's right.
They're a mobile telecommunications company. They're a media company. We recently bought for my house the little Apple TV box, which allows us to broadcast Netflix and other streaming video onto our TV and capture what we have on our iTunes, which is the software package which holds all of the songs and movies and other media that you're able to download onto your computer. So they're slowly taking what we understand as being this concept of the multimedia entertainment, and they're bringing it into the house, and they're letting it take it from the house to your office, in your car, wherever you go.
I need a technology and financial expert to keep me up on all this.
When you're a newbie investing and you hear of Apple, you mentioned the innovation word. Is that a big part of what you consider when you want to buy stocks? Oh, this company's been developing all these products. I know they got to come up with some other things I'm going to buy. Is that a good sound way to look at it?
When we look at investments, we generally look at things along the scale of something that has value, all right, with growth, or something that basically is giving you income. All right.
So you're looking more at the numbers than the concepts.
Well, right, but the concepts generate the numbers. All right. So we're looking now. We just saw that they released the new version of the iPad, which they refuse to call iPad 3, but everyone calls iPad 3. All right, it's the new iPad. All right, that generated a huge amount of sales in the first week and continues to have a great deal of demand. We know that later this year, the iPhone 5 is going to come out. And we know that next year, they're going to have the TV, the actual TV screen with all the software that is currently integrated on the iPad and the iPhone is going to be integrated, plus more on this TV screen that you can be able to use from home.
So you're saying based on that, buy?
Based on the fact that they're going to earn $45 a share this year, I would buy it, and I think next year we can look at them earning even more than $45 a share.
You would buy it. Do you own it? Out of disclosure.
Yes, personally, for my family and for my clients at LakeView Asset Management, which is an RIA firm, that I own and operate. We own Apple stock and we own Apple calls.
How much cash is Apple sitting on right now?
It's about $100 billion, which is about $100 per share.
Unbelievable.
Wow.
Tremendous. Just think about what they can do with that $100 billion.
And how fast technology moves, and I wonder what this conversation will be like a year from now, and what technologies we don't even realize are out there. So a good investment.
Oh, I think it's an excellent
investment. If you've
got the money. Yeah, well, look, but if you have money to invest, even if you only have $1,000 to invest, you can buy one share of Apple.
Buy one share?
And put the other $400 into a mutual fund.
Now, let me ask you, so there's a difference between buying just a regular stock buy, and then there's something called warrants and options. What are the differences with those things?
Well, I own call options on Apple, as I mentioned before. Those are highly complex derivative securities, something that an individual investor really should not be investing in, if you ask me, both as a professional and also as an academic. They are non-linear securities, which means that they don't necessarily move step by step with the price of the stock. They are also short-term in nature. They are highly leveraged. There's a lot of complexities when it comes to options and warrants.
So much more risky.
Much more risky. And frankly, if you are going to be using options and warrants, have a professional like me do them for you.
We thank you for your insight and analysis.
My pleasure. Thank you very much.